Saturday knowledge sharing webinar that we are organizing at Mehta and Mehta year after week. Many of you would be aware that this is our ongoing masterclass on Companies Act 2013, and today is the 19th session under the Companies Act, and the topic is Audit and Auditors. So I'll just briefly introduce our panelists today. Disha, can I have the introductory slides, please? So our presenter for the day is Akshar Patel. He is a senior associate finance and accounts with Mehta and Mehta. Akshar comes with an experience of 12 years. He is a member of ICAI, a chartered accountant, a company secretary, and also a law graduate from Mumbai University. Uh, we are honored to have Akshar at Mehta and Mehta for his expertise in the fields of audit, accounts, tax advisory, and his solution-oriented approach to complex corporate strategies and corporate transactions. So, welcome, Akshar. He'll be running the presentation on the topic of audit today. Next, we have with us Nikhil ji, I welcome you. Mr. Nikhil Patel is coming with nearly 4 decades of rich experience as a chartered accountant. He is not only a proprietor of Mrs. Nikhil Patel and Associates, but is also a partner at two leading CA firms in Mumbai, Kapoor and Parekh Associates and Mrs. S.S. Kapoor and Company. Now, 4 decades speak of itself, but also he contributes being a member of several chambers, chartered accountant societies, and serving their committees of accounts and audit. So we welcome you, sir, today as our co-panelist. Now, what to say about Professor Balakrishnan and Sudhakar, sir, our two esteemed panelists who have been in this webinar, who have taken the onus to be the experts for these webinars at Mehta and Mehta, which have been running for the last 2 years. But briefly, yes, Sudhakar sir, Mr. Sudhakar Saraswatula is a chartered accountant, a company secretary, and his last stint, we all recognize him as serving for around 2 decades at Reliance Industries as their vice president, company secretary. And he comes with, again, an experience of more than 30 years. Then Professor Balakrishnan, again, 4 decades of experience. Sir, it's a privilege to introduce you today amongst the fraternity and the participants. We all see Mr. Bala, Professor Bala, contributing to various articles in Chartered Secretary. He's a regular contributor. He's the face of CCGRT. And also we read his articles on taxman. So I welcome you all. And now I would request Anuj ji, Anuj ji, yes, Anuj ji, Mr. Anuj Ashok is the founder of Anuj Ashok and Associates. A very distinguished feature about Anuj ji is that he established, rather pioneered the practicing side of our profession from Agra. At that time, when I'm talking about year 2002. And we discussed about it. Anuj ji, welcome today. Your contributions speak of themselves, and thank you so much for joining us today. So why not we start with you, Anuj? Just set the ball rolling and speak about the topic and set the introduction for the presentation today.
Right, ma'am. Thank you very much. Myself, Anuj Ashok. I'm practicing as a company secretary in Agra as well as in Delhi. Today's topic, audit and accounts. Audit and accounts is an interesting topic in so far as company law is concerned, especially when we practice as a company secretary, we used to do first associate working with a chartered accountant altogether. Because whenever company secretary came in picture, first the society recognized the chartered accountant as a professional who serve for corporates first. Lately, we come in picture. So far as accounts and audit is concerned, it is a parallel picture for company secretary to move on step by step for getting a company compliance is done. Firstly, we have to check accounts we get audited by the chartered accountant. Then this balance sheet came to us for further compliances and procedure of Companies Act. Here, the role of a company secretary start as a practicing company secretary. Before that, a person who is doing job in an employment for corporate, they have to work for side by side. Internal auditor can be a company secretary also. In accounting, implementation, secretarial audits, implementation of NAFRA compliances, implementation of secretarial standards. These all need to be done side by doing regular compliances in Companies Act, accounting, and their workings. Today's topic, we are going to cover section 139 till 147. The appointment, how we do take care appointment for first auditor, then the requirement of annual general meeting appointment, their terms, their removals, their eligibility, their disqualifications, and what important things we also need to cover today, that what the line of law says and where we get trapped into the law lines, because in few of cases I found auditor cannot be removed. In general, if we saw law says that auditor cannot be removed at all. But there is also a condition where auditor can be removed. In a case, sometimes we found that auditor has resigned and casual vacancy created in a company. Then how we do fill the casual vacancies? Where the disqualification arose during the period and tenure of a person who is doing audit day by day and year by year. Here we have to check some more things, how and when this disqualification arose and how to deal with those disqualifications. Next, coming to another sections, we have to take care what balance sheet and audit report need to be deployed. Sections, standards, NAFRA compliances, RBI compliances, and many other regulators has implemented so many things which need to care by doing audit and reporting to the corporate systems. This probably we are going to cover with the all good experience of Nikhil sir and Sudhakar sir and Bala sir. Thank you.
Thank you, Anuj, for your overall perspective on this topic. I would agree with what all you said, and we'll see forward how we discuss about all these things and perspectives in the course of our presentation. And now request Nikhil sir. Nikhil ji, kindly
Yeah,
share your thoughts.
Anuj has already said the outline. Now, we with our experience, Bala sir, Sudhakar sir, being in practice for so many years, we do come across certain situations and we find a way out. So those nitty-gritties related to appointment of auditors and related matters, as and when we come to the slide, we'll share with you.
Sure. Yes. So, Professor Bala, now I would request you to kindly take the presentation forward and your words of wisdom.
I will request Sudhakar to address on this topic a few words before we start.
Yes. Yes.
Thank you, Bala, and good morning, everyone. As Anuj and Nikhil Bhai has said, the auditor role is a very important one, that which we all know. But before talking on the subject, I am heartening to note that when Brazil said that we have reached the 19th webinar on the Masterclass of Companies Act. In fact, when we did it almost, that means it is about 4 months we are continuously doing this thing. In fact, when we conceived this idea of Masterclass on Companies Act, we thought that we have almost traversed a decade of with the Companies Act. So why can't we have a kind of a revision? It is really heartening to note that we have reached the 19th webinar and up to chapter 9, rather chapter 10, I can say that. Having said this, now coming back to the topic of the day, the role of the auditor. And in fact, I recollect when the Prime Minister at one point of time has chartered accountants. I think if I am not wrong on that, that was about 4 years before or so. And in fact, even now also we grapple with the same idea of that whenever there is a financial scam takes place, how the role of an auditor has been discharged, the responsibilities and the duties, whatever the auditor has, how far his role is there. Sometimes whether the diligence which is required, whether it was there or not there, or negligence was there, or you can say that I mean, one of the reasons it used to be earlier that the chartered accountant once appointed, it used to be like a lifetime appointment kind of thing, because though year after year we used to appoint it, but we never normally auditor has not been changed or removed. For the first time, Companies Act 2013 has brought in that appointment of auditor for a consecutive period of 5 years. That means while you are appointing an auditor, you have to conduct proper due diligence of the audit firm. Because when you are appointing year after year, okay, the amount of seriousness while appointment is there or not there. That was, I think, one idea of that the regulator has grappled with. And he said that whichever the company it is, you have to appoint the auditor for a period of 5 years. In fact, several times the question come up that, especially in case of private companies and the startup companies, they used to ask the question, how can we appoint the auditor straight away for 5 years? Because the removal of an auditor is very, very difficult. That means the seriousness of appointing an auditor while appointing itself, one has to be very, very careful about that. At the same point of time, that whether this idea of having two terms of 5 years each for all listed companies and certain class of companies, they both every action have a both pros and cons. In this case, what happened is no doubt about it. Auditor cannot take his position for granted. So auditor is always know that, but he has to it is the way they are expected to, so that after that 5 year cooling period, again he can come back to the position. The only problem is that when the auditor is conducting the audit of an organization, he has to understand the nuances of the business also. Say, for example, a company like Reliance Industries, which is into oil and gas, which is into retail, which is into telecom. Understanding these businesses by the audit firms is very, very, which the auditor develop the ability over a period of time. Now, all of a sudden, after become vacate the position and somebody else have to be brought in, again, those people have to develop the ability. So these are a few issues which we initial stages we have grappled with when the new act was enforced. But over a period of time, the all the audit firms, I mean, could develop. And it suppose if it is a telecom business or a retail business, only Reliance is doing it, but the other companies are also there. Obviously, those auditors will come here and these auditors will go there, something like that. It is happening. So I give a pause here, and when we're discussing Akshay make his presentation, I was Akshay. It was an excellent presentation, but only thing is, Akshay, it's such a lengthy topic. It is how you are going to handle in 2 hours. It depends upon the, I mean, your expertise. What my request to you is, don't go into the filing forms and all those things, but touch the soft points, which are the crucial points out there, so that we can have some kind of a discussion on that.
Yeah, sure, sir. So, am I audible?
Yeah, very much.
Yeah. So, good morning, everyone. Today we'll be discussing a crucial aspect of corporate governance, a role of auditor, and their appointment. And in this presentation, we will be covering the section from the section 139 to 147, which in which we will cover the appointment of the auditor, their removal, their duties, responsibilities, what forms are required to be filed, and what are the penalties that are being imposed by the Companies Act. So let's start with the section 139. Section 139 says about the appointment of the auditors. So legal framework, that overall what section 139 covers is the section 139 of the Companies Act governs the appointment and reappointment of the auditors for the companies in India. It also establishes the criteria, procedure for the selecting the auditor, their tenure, rotations, what are the qualifications that are required to being appointed as auditor. It outlines the responsibility of the companies as well as the director and the auditors. The main purpose of the section 139 is to ensure the structured and compliant audit process by accepting the whatever amendment that are being given by the MCA or regulatory authorities.
So section 139(1) says that the appointment of the first auditor. So generally the first auditor is being appointed by the board of director within 30 days from the date of incorporation of the company. And that auditor will hold the office till the conclusion of the first AGM. And at the first AGM of the company, the individual or a firm must be appointed as the auditor, and that auditor will serve until the conclusion of the sixth general meeting, provided his term is for the 5 years. The auditor will continue for every subsequent AGM as well, if he is being reappointed for the second term, as per the applicability. Further, this is out of the section 139. The SEBI LODR regulation says that any auditor is being appointed in the listed company, then that auditor must hold the peer-reviewed certificate issued by the ICAI. So only those auditor who are having the peer-reviewed valid certificate can be appointed as the auditor for the listed companies. And before appointment, company must obtain the recent written consent from the auditor for their eligibility and their even willingness to being appointed as an auditor. So rule 3 and the rule 4 of the auditors rule 2014 prescribe the detailed procedure how the appointment of the auditors is being made, and ADT 1 is required to be filed whenever the auditor is appointed. Next. Yeah. So rule 3 says the manner and the procedure for selection and the appointment of the auditor. So the selection and the appointment of auditor involve the several steps which are mentioned below. First, wherever there is appointment is being made in two phases, like differently, where some companies required audit committee to be there, and in some companies the audit committee is not required. So wherever there is an audit committee in the company, that time the audit committee will first assess the qualification, and they will overview the aspect of the auditors, who is the auditor, what are their expertise, and what is their background, and if it's suitable, it will recommended the board for their appointment. The if there is no audit committee, then the same functions are being performed the board of director of the company. Audit committee or board may ask for the further detail from the auditor to get themselves satisfied for the proposed audit appointment. For the companies with the audit committee, it recommends the auditors to the board, and in other case, the board directly recommended the auditors to the members at the AGM. Further, if the board agrees with the audit committee recommendation, it will propose the auditors to the AGM for further final appointment. But if the board disagrees the recommendation, it must provide the reason and refer it back to the audit committee for the reconsideration. However, if audit committee further do not consider the same, then the board must document the reason, and then it is placed to the members at the AGM for further approval. So this is the process given in the auditor's rules, rule 3. Next.
1 minute, Akshay.
Yeah.
See, I don't know why the echo is coming. Saddam has to take care, because when I am speaking, I can get my echo. Bala, you're also getting that, or only I'm getting? Now it is fine. Yeah. Akshay, what I want to say is that recently one company, they have appointed an auditor. It is a newly listed company. I don't want to take the name of the company here, but we can certainly discuss what is the issue involved in that. In that company, what happened is they have appointed an auditor. And after, of course, audit committee was there because it is a listed company. Audit committee has gone through. It has recommended to the board. Board has recommended to the shareholders. Ultimately, they have been appointed. Subsequently, the company has realized that the audit firm has no experience to do that kind of an audit at all. This is what I was mentioning, that an auditor has to understand the business and the nuances of the business so that he will be able to discharge the responsibility as an auditor very well, the way it is expected. So in this case, what happened is that they realized the auditor admitted that he has no expertise to do that kind of an audit. Now the question is, auditor don't want to resign. What reason he has to give for his resignation? Company is not in a position to remove him because it will lead to unnecessary things, because it is a newly listed company. If they are removing the auditor, it is going to have a repercussion on the issue, their share price in the market. So many things are there. So that point of time when this question has come, I asked this audit committee chairman, who is a friend of mine, that what role and how the audit committee has played while recommending the audit firm's appointment to the board. It was just a paper pushing thing only. The CFO has recommended the audit firm to the audit committee, and the CFO has certified, and the company secretary also agreed that they are eligible, they are qualified for an appointment as an auditor. And audit firm has taken the remuneration was recommended to the board. Board has further recommended like a postman kind of thing. Only unfortunately, it so happened. But here, we must say that whenever the audit committee is recommending the audit firm's appointment to the board, audit committee has to conduct an interview kind of thing. Whichever is the firm they are going to recommend to the board, they have to ask that how many partners are there, who is the signing partner, what sort of expertise the firm has, and what sort of expertise the signing partner is going to have, what sort of expertise the team is going to have. So these things they should not shy off. They have to ask all these questions, and unless until the audit committee satisfies itself, it should not recommend to the board at all. And at the same point of time, even the board also has to take some kind of a responsibility. Merely audit committee has recommended, it doesn't do well. So what I'm trying to say is sometimes it so happened we take the procedural part for granted, and just for the sake of compliance we comply with. So wherever, in fact, that as a PCS form or as a CA form or whatever it is, whenever we are going to recommend any kind of a professional to any company for appointment, this kind of due diligence is to be conducted. Thank you.
Yeah. In fact, Nikhil can share the practical experience because much before we, get appoint the auditors. First thing is the company normally they actually contact the people. They run a preliminary check of their qualification, eligibility, experience, expertise, etc. I think Nikhil could share his experience. Over to Nikhil, please.
Yeah, as Sudhakarji rightly says that audit committee before recommending, they should do some fact finding. For example, let's say my firm is in practice, let's say since last 25 years, but I have done audit of a company size of only 50 crores, and now suddenly the company who wants to appoint as a turnover, let's say 5,000 crore. So a lot of disparity is there. So they need to check whether I will be able to do that. See, as a professional capability, yes, all chartered accountant can do the audit, but whether they can do it, justify their audit, because as you know now, if it is a listed company, then time also is short. So what you need is, apart from the firm, what is their bench strength, what is their manpower strength, and what is the expertise of all those people. As Sudhakarji rightly said, that which team is going to do that, they have experience. Now, let's say of our age, we have been doing audit of the actual written books, was not computerized. Now it is computerized. Now a lot of transactions happen through digital. So now that the staff which we have, they are expert in digital transactions, etc. So all these things are looked into.
Yes, Akshay, you can proceed.
Yeah. Yeah, so Rule 3 also provides the terms of the office. The auditor appointed at the AGM will serve from the end of the meeting until the end of the 6th AGM. That's for the period of 5 years. 5 years terms. Rule 4, condition for the appointment and the notice to the register. Rule 4 says that what are the condition needs to be fulfilled before the appointment of the auditor. It says that we need the certificate and the confirmation from the auditor that they are eligible and not disqualified under any relevant law or regulation. The appointment complies with the specific terms mentioned by the Act, and it is within the limit established by the Act. That is, number of companies in which they can become auditor, or number of listed companies in which they become auditors. If these limits are, if their appointment is that within that limit, then they are eligible to be appointed as an auditor. And we need to find the form, the ADT 1, whenever the auditor is appointed. Next. Yeah. So section 139 subsection 2 says about the rotation of the auditor. So provision says that unlisted company or company belonging to such class or classes of the companies as may be prescribed shall appoint or reappoint an individual as an auditor for more than one term of 5 consecutive years, an audit firm as an auditor for more than 2 terms of 5 consecutive years. Further, these terms are not applicable when there is some external authorities like RBI or SEBI mandates the tenure of the auditor for a shorter than this. For example, in the third point, it is mentioned that the NBFCs where the RBI has mandated that the appointment of the auditor is valid for the period of 3 years, and then they are not be re-eligible for the appointment for the next 6 years. So this is where the RBI will prevail over the Companies Act. Now the class or classes of companies which is mentioned in the 139(2) says that for the purpose of subsection 2 of 139, the classes of the company shall mean the following classes. All unlisted public companies having a paid up share capital of rupees 10 crore or more, all the private companies having a paid up share capital of rupees 50 crore or more, or all the companies having paid up share capital below threshold limit of A and B, but having a public borrowing from the bank or financial institution is more than 50 crore or more, then they have to comply with the section 139(2) for the rotation of the auditor. And the ADT 1 form is required if they are reappointed also, then we have to mention the revised terms in that. Next.
One minute. Sir, here in this reappointment, let's say you are not fulfilling those criteria. Go back to that rotation. Yeah. Like your paid up capital, etc. But the third condition is that your borrowing, public borrowing should not exceed 50 crores or more. But they have not mentioned when or which financial year. Now let us take a case that somebody is appointed as an auditor of a private limited company. And let's say 3 terms of 5 years has been over. Now he's being considered for reappointment for the 4 terms of 5 years, which otherwise he is eligible. Now let's say in March 24 that 3 terms have expired. Now for the 4th term, in the 30th September AGM is being considered to reappoint for another 4th period of 5-year term. Now what happens if the borrowing exceeds after 31st March? Now there could be, when I'm signing the balance sheet, probably I have some access to the account. See, many times what happens, client with the company may not be aware of this thing. So on 31st March 24, during 23-24 and earlier period, borrowing has not exceeded, so eligible for again a 4th term. So not liable for rotation in short. But then what happens if subsequent till the AGM, let's say AGM is being held on 30th September. So anything happened between 31st March till you sign the balance sheet, since you are present in the office for audit, you might come to know that company has planned to borrow, and because of that old plus new borrowing might exceed. But there is no clarity whether in this case, should he get reappointed? Ideally, he should not, because till the AGM is held, if borrowing exceeds 50 crores, my personal view is that he can withdraw from being reappointed. Some different views, solicitor?
Usually it is.
Yeah, I think I agree with you. What you rightly said is that during the year, because of these threshold limits, if the auditor becomes disqualified, definitely he has to lay down the office and the company has to appoint a new auditor. If he is not qualified to be appointed for that, whatever the period is that okay, the 5 consecutive years is there and all. Anuj, you were saying something. I'm sorry.
Just my one more view, Sudhakarji, that suppose at 30th September AGM is appointed and then 10th of October company's borrowing exceeds, then what? Because my personal view, on the date of appointment, if you are not violating anything, then you will remain for another terms of 5 years.
Correct. You're absolutely right.
Yeah.
What Nikhil also said, before the appointment, before the AGM took place, after the closure, he comes to know. That means at the time of the appointment, he is actually not fulfilling the eligibility condition. Because after he is appointed, then the eligibility condition goes up subsequently further. Probably the next time appointment, the eligibility condition will be checked.
Correct.
But this is exactly, Nikhilji. I think I am also saying the same thing.
Right.
Yeah.
Whenever whether at the time of his appointment, whether he is qualified to be appointed as an auditor or not, right?
That's crucial.
So at that particular date, if he is qualified to be appointed as an auditor, that is fine. But my only contention there is, suppose, for example, during the tenure, if he becomes disqualified, then what happens?
Sir, he has to
The
complete his term.
disqualification may be on account of anything, that there may be a kind of a regulatory disqualification or some kind of what they have given a certificate on the date of appointment that they are qualified to be, but subsequently we came to know that they are not qualified to be. In that case, it is different. But as far as threshold limits are concerned, during that tenure, if the threshold limits change, that he will continue to be for that 5 years, he can continue.
Right.
Next
No,
his
but here,
appointment, that time the threshold limits will come.
correct. But practicality, actually, government should have put this borrowing limit up to, let's say, 31st March of that particular year would have been ideal. Because here the challenge is between 31st March and let's say 30th September in our example. Now, here, let's say we are doing audit and we are signing after 3 months. So during those 3 months, there is a interaction with the client. You are going, looking at some of the books. So you might come to know that company has some plan or they've already borrowed a kind of a thing. Now, once you have signed off, then again you will visit somewhere in November, December. And if between July and AGM, if something happens, unless clients tell you. So what I'm saying is 31st till AGM is a crucial period whenever you are getting reappointed for more than second term. So you should be careful, both as a practicing company secretary, as a compliance, and for the auditor also. They should, before AGM, they should otherwise write to them whether they have exceeded the borrowing limit or no before considering that. Because of the relevant
what my
requirement.
understanding to this particular point is that it should be checked in the previous year. Preceding year, if we are borrowing.
But Act doesn't specify.
Act doesn't talk about that. That is the whole problem.
It is my understanding to law that up till date of 31st March, we can check for paid up capital as well as for borrowings of a company. Sorry, turnover as well as paid up capital. And the borrowing so far and deposit is concerned, during any point of time, it goes beyond the threshold limit of 50 crores. Then in the coming year, if we are getting an appointment, reappointment approvals, then we have to check whether auditor is eligible or not for reappointment during the term period if concerned about. Because it is only going to a disqualification when we get to these threshold limits upside and knowingly we are appointing, then only it becomes disqualification. Otherwise, section 139 subsection 2 specifically says it is a term of rotation. And if once you are appointed for 5 years, the auditor has to continue for his office, even though during this 5-year period, as Sudhakar said that during the 5 years period, these threshold limits crossed, even though the auditor has to continue the office for next whatever period left for his audit purpose.
So that is true. Yeah, but only crucial is because they have not mentioned borrowing should be during the year, and also your appointment, let's say, happens on 30th September. So those 6 months also company has to keep a tab whether their borrowing has exceeded in that case. And this situation arises only when you are getting appointed for more than 2 terms of 5 years. For first 2 terms of 5 years as a firm, no issue. Right. But normally what happens in private limited, as Sudhakarji said, that earlier used to be auditor. I mean, even if you take the examples of Tata's and various, those Ferguson, etc., have been auditor for 40, 50 years. So in all those cases, when private limited company, what I'm saying from both from company's point of view and from auditor point of view, if it is a more than second term, be careful between this intervening period of 6 months.
Sir, I need one more clarification also. So far as borrowing is concerned, when we talk about borrowing, so fund-based and non-fund-based both will going to be calculated in getting this 50 crores limit, or otherwise only the fund-based limit and whatever corporate guarantee we had given to different group companies will also be going to cover in that.
According to me, both fund-based as well as non-fund-based also you have to take into account.
And I am of that opinion. And if we see, look from the point of view of conservatism, that is the better way.
Yeah, absolutely. I also agree with you. That is the
I
same
have
thing.
practically seen both being taken well. And there is one relevant question we should definitely discuss, a short one. Madhusudan VS has asked, what if the bank sanction is more than 50 crores, but actual utilization is less than 50 crores? Then also will this rule apply? This happens practically.
So it's on the sanction, not the utilization. Because amount is given to you, so whether you use it or not, you are exposing a 50 crores risk. So it's on
Yes.
sanction.
It's on the sanction.
Yeah.
So do we proceed ahead?
Yeah.
Yes, Akshay.
Next slide. Yeah. So rule 6 is the manner of rotation of the auditors by the companies on expiry of their term. So audit committee shall recommend to the board the name of the individual auditor or audit firm who may replace the current auditor on the expiry of their term on such increment. If the company is required to have audit committee, and board must consider the audit committee's recommendation for the rotation. In other case, the board will handle the rotation of the auditor and recommend to the AGM, to the members. For the purpose of the rotation of the auditor, when the calculating the period, calculating the period of for which an auditor has served the time they held the office before the Companies Act 2013 came into effect, it includes the total tenure of 5 years and 10 consecutive years. So it will recon from the date before the act came into effect, and the 5 years will be calculated from that date. A new auditor or auditor firm cannot be appointed if they are associated with the outgoing auditor or auditor firm within the same network of the audit firm. This ensures the continuity in accounting periods and prevent the conflict. So same network. Yeah, next slide. So whenever there is a reappointment of the auditor and auditor belongs to same network, it is defined in the act that same networks refer to audit firm that operates or function under the same brand name, trade name, or under the same control, whether currently or in future. So explanation 2 says that if there is a break in the auditor's term for the 5 consecutive years, this break will count as a fulfilling the rotation period. This is known as a cooling period. If partner responsible for certifying the company's financial statement retires from the one audit firm and joins the another audit firm, then that new audit firm will not be allowed or to be appointed as an auditor for the same company for the period of 5 years. So this is clearly defined in the act that if the auditor was in the previous firm and then he joined another firm with a different name, but because he is a common in the previous firm, that other firm becomes ineligible for the appointment as an auditor. Section 139(3) says about the manner and the procedure of selection and appointment. Subject to the provision of the Act, members of the company may resolve and provided that in audit firm appointed by it, the auditing partner and his team shall be rotated at such interval as may be resolved by the member, or audit shall be conducted by the more than one auditor. So this section says that whenever the appointment is made by the members, so members can direct the audit firm, or they can mention in the resolution that if the particular auditor is being appointed, they can mention that for the 2 years, the one partner will do the audit, for another 2 years, another partner will do the audit. So member has a right to mention in the resolution, or they have a right to put the point to the company that the audit team should be revised every year or every 2 years. Nikhil sir, would you like to explain further the practical example of this?
No, basically the law should be followed in spirit, and that's why they have provided that if I am a partner of a firm which has completed the 2 tenures of 5 years, and then I know now in the next, and then I leave my firm and I join another firm and that gets appointed and again I sign it. So that kind of thing is not allowed. So expressly it is provided. So that's the right spirit.
Yeah. So next. Section 139(4) says rule for the rotation of the auditor. The central government may prescribe the manner in which the company shall rotate their auditor. So currently what they have mentioned, we've already discussed. Further in future also they can change the rule. So this is what the section 139(4) says. Section 139 subsection 5 says the appointment of an auditor in the government companies. So in the government companies, the comptroller and the auditor general of India must appoint the auditors within 180 days from the start of the financial year. This auditor will hold the office until the conclusion of the annual general meeting for that financial year. Section 139(6) further says that appointment of first auditor in non-government companies. So in the non-government companies like our private companies and public companies, the board of director must appoint the first auditor within 30 days of the company's registration. If the board fails to do so, it must notify to the member who must then appoint the auditors within 90 days at an extraordinary general meeting. The auditor who are appointed by the board will hold the office until the conclusion of the first annual general meeting. If members also fails to appoint the auditor under section 139(6) of the Companies Act, then it mandates that the company must inform the registrar, who will then appoint the auditor. Next.
Here is an important thing, Akshay, that for especially section 139 subsection 6, there is no mandatory requirement to file ADT 1.
But ideally, we should file it.
It is recommended, but it is
Yeah.
not mandatory. If we go to the core lines of law, in section 139 subsection 1, it specifically says the auditor has to fill a form ADT 1. So far as 139(6) is concerned, nowhere it is written even in rules and law that ADT 1 for first auditor need to be filed mandatorily. It is optional. We can file, we cannot.
I think probably
Only
we can seek the view of the Mridul, because what happens, I understand. When you file the ADT form and subsequently, if you have not filed the earlier ADT 1 form, you come across some problem, I believe. Am I correct, Mridul?
No, sir. So practically, I agree with what Mr. Anuj is saying. We have seen this in umpteen of cases, and this is industry-wide view. And so far, there have been no objections or any concerns on the subject. For the first, Mr. Anuj has rightly explained the provisions. I'll not repeat those provisions, but for the first auditor, it is not mandatory to file Form 81. And there is no later on when the actual auditor is appointed in the annual general meeting, the shareholders' approval is in place. That time, the process continues for subsequent years and subsequent appointments. And the process is going on well with the ROC and MCA. There is no concern as such.
If the regulator is not questioning about non-filing of first auditor's form, many times we saw in many companies that if company after getting incorporation appointing first auditor and not filing ADT 1 form, then there is no question at all from regulator as well as from the secretarial auditors and auditors even.
Yes. We all so many discussions. I have had, I think, 20 plus discussions on this topic, and there is a collective wisdom around it.
And if we go with the law lines also, there is no mandate requirement for filing of Form 881 for 139(6).
But I don't know, in practice, I come across whichever the company is there, they have all been filing it practically. That's what I also see. Yeah.
More complexity arises when I can go on, and more complexity arises when there is restructuring going on. So during restructuring, some appointments and these ADT 1, whether to be filed or not, then a stand has to be taken. And there we say that for better governance and disclosures, you file ADT 1. But in this usual process, the first auditor being appointed, and so it's not necessary when the board appointment is done. Yeah.
Okay, go ahead, Ashok.
Yeah. So Anuji, if say first auditor is appointed in the board meeting and in the AGM, if the shareholder do not approve that appointment, then who will sign the accounts in that case?
So especially for auditor, there is no mandate for making a rectification of first auditor. It is nowhere also written. The board has a power to appoint first auditor, and he will continue his office till the conclusion of first AGM only. So here, as per my understanding to law, that law is not allowing members to make that auditor's appointment rectified or reappointment. If reappointment is only then the shareholders' role came in picture.
So good practice is to file the ADT 1 so that even the members would come to know who is the auditor and they can object at any time before the AGM as well.
Usually we prefer to file, but I'm just putting that there is no mandate provision in law to file ADT 1 for first time of auditor appointment.
Okay. So section 139(7) says that the time limit for the appointment of the auditor in the government companies, and this is a small chart which shows the time limits that first auditor should be appointed by the CAG within 60 days from the date of incorporation. If it doesn't happen, then board of that company has a right to do that within 30 days from the last deadline given to the CAG. Even the board cannot do, board fails to appoint the auditor within that period, then the members of the company has to fulfill the appoint the auditor within 60 days from the date deadline given to the board of directors, and that auditor will continue to hold the office till the next AGM. Next. Next. Yeah. So section 139(8) says about the casual vacancy. So casual vacancy of an audit under the Companies Act refer to a situation where a position of the auditors become vacant before the expiration of his term due to unforeseen circumstances like resignation, death, disqualification, or the removal of the auditor. And any casual vacancy of the in the office of an auditor shall, in case of a non-government company like a private company, the board must fill the casual vacancy within 30 days from the date of that unforeseen event. If the casual vacancy is due to the resignation of the auditor, then that appointment must be approved by the company in the general meeting within 3 months of the period from the board's recommendation, because the resignation is something where the auditor where the members should know the reason why that auditor is resigning. That's why the power is not been given to the board in case of resignation, and he has to take the approval from the members of the company. And a newly appointed audit firm will serve until the conclusion of the next AGM in case of casual vacancy. And as per section 139(8), if the CAG fails to fill the casual vacancy, this is for the government company, and in that case, power goes to the board, who has to do within 30 days, and the appointment must be approved in the AGM within 60 days. And in this case, the ADT 1 is to be filed for the new incoming auditors, and ADT 3 is required to be filed by the retiring auditor, attaching the required document of resignation and reason for that. Next. Section 139(9) provides the reappointment of the retired auditors. So whenever the terms of 5 years is expired or 10 years is expiring, then those auditor can be reappointed only if he is not disqualified for the reappointment, or he has not given a company a notice in writing for his unwillingness to be reappointed, or the special resolution is not passed to appoint the auditor and expressly mention that this auditor should not be reappointed. If these are not the things, then the reappointment of this auditor is possible for the next term. So here the one case studies we have covered is Infosys auditors appointment disputes. In 2021, when Infosys was having its AGM, and the board has recommended the appointment of the auditors, reappointment. So that time the investors who were present, the shareholders who were present in the meeting, they have objected the dispute over their financial statement, and also they have asked the reason and justification for reappointment of the same auditor. So this shows that the law is being transparent and the awareness is there between the shareholder, and they have objected, and even they have raised the queries on the financial statement along as well as on the auditors who were signing the balance sheet and their reappointment. So this is the case. Next. Section 140 says about the resignation and the removal of auditors. So this is the overview which covers. It says that as per the Companies Act, the auditor may resign due to disagreement with the management, professional concern, or any person reason. The Act also allows company to remove the auditor for reasons such as a performance issue or conflict of interest. The procedure for both resignation and removal of auditor governed by the Section 140 of the Companies Act. This provision ensures that the transition are handled with a transparency, fairness, and accountability. Adhering to this mechanism is essential for maintaining the effective oversight and ensures that the financial report remain accurate and reliable during the audit transition. So Section 140 tries to protect the interest of the shareholder wherever there is a removal of the auditor or resignation of the auditor, so that auditor who is incoming auditor should know what has happened in the past, and so it provides a good hand holding between two auditors to protect the interest of the shareholders. Next.
I think Nikhil can share on this because when we talk about the resignation, yeah, law says that an auditor can resign. But in case of the listed company, there is a specific provision. I think, Nikhil, you can start after that third quarter limited review in the fourth quarter, what happens?
So the Companies Act provides, like 140 says that auditor can resign. But then if you look at the LODR, it says that if the auditor has done the limited review for 3 quarters, then he can't resign during the 4th quarter, saying that I'm resigning and I'll not do the audit. He has to complete the 4th quarter. Basically, that is also then the annual accounts. So sometimes, normally it is presumed the reason for resignation is disagreement with the management. No, for fiction because of different viewpoint on some accounting policies or certain matters. Now, management not agreeing with the views of the auditor. The current base example, I think, was Baiju, where Deloitte says that your method of accounting revenue is not correct, etc. And then accounts were held up for more than 1.5 years and like that. So, very cases have happened where in the 4th quarter, auditors have resigned. Then management has brought in another auditor who subscribes to their views, and then accounts were getting it done. So SEBI has put this spanner saying that if you already done 3 quarters, you can't resign. If you do not agree, you qualify whatever you want to do. No? There are various types of qualification. Either it is a modified auditor's report, or there is a disclaimer, or there is an adverse opinion. But you have to complete that account, and then you can resign.
In fact, the primary reason for that is that SEBI has observed some auditors, when
Yes.
they have to qualify the report, instead
They
of
would
qualifying
resign.
and getting a bad reputation in the market, they used to resign and then they want to go away. So they
No,
said
both
that,
bad
if that
reputation.
is the
Sometimes management also doesn't want qualification, so they have been
exactly
That is
listed
right.
for that.
Both
So
the ways.
both ways, correct. See,
Usually,
management doesn't
what is
want
the
that. Management has to remove the auditor. So that is, see,
yes,
management does not want the qualification. It is not that simple. But the simplest thing for the auditor is that it has been observed. Some auditors, wherever they were to qualify the report, if they qualify the report, what happens is when some other companies they have to reappoint them, they will come to know that by this particular audit firm is very stubborn. So there may be some kind of
yeah,
issues are there. So what normally it was observed is by that they want to exit with a good note. So they used to just simply before signing the balance sheet, they used to put the resignation.
absolutely
So
right.
SEBI said, no, you cannot just wash off your hands like that. When the dirty linen is there during your tenure, you have to clean that before you leave that.
Yes.
Yeah.
So to that extent, that conditions will override your auditor's right to resign. That's
Yeah, in case of the listed companies. Yeah.
Correct.
Next slide. So
Well,
section
there are a lot of questions. Why can't you take up the questions now?
Yeah, we can do that also. Yeah. Okay, let us take the questions. Matter are points of the non-compliance with the regulatory and other laws applicable to a business entity where an auditor should report in his audit report whether such non-compliances, if material, be mentioned under matter of emphasis and paragraph in the audit report.
yes. If it is a material an auditor feels, then it could be either a matter of emphasis or it could be a part of qualification. There is an auditing standard series 700, 702, 705, etc. So based on that, yes, I mean, it's a mildly, you are saying under matter of emphasis is a mild one, but it could be as severe as a qualification also.
In case of the private limited company, the schedule of PPE is not to reconcile property with respect to 3 assets, that is furniture and picture, computer and plant and machine. Not reconciled means the value of our set assets, gross block as at the end of the year is lower than the accumulated depreciation as at the beginning of the year. A serious mistake and still the statutory auditor certified true and fair view. What action can be taken such a gross negligence on the part of the auditor? Should auditors or shareholders should take up his mistake to the notice of the disciplinary board of the ICAI. Statutory auditor has grossly violated SA 230. In addition, he failed to report the compliances with the customers and also other law mistakes of the material amount. Please advise.
Yes, it can be taken up with IC.
But
No,
here I also added as a comment. See, ultimately we have to look from as company secretaries. If you are raising this
Exactly.
question, we have to look from the greater perspective of governance as well. Should the auditors not have raised this issue and presented it before the audit committee as a prior? And then is the onus not on the audit committee to take a view here to see what is going on, what are the lapses, and ultimately the board is that has to take due decisions in this regard. But yes, from ICI disciplinary board and all these are different the pedestals altogether. But
Here I
then
would like,
yes,
yeah,
there are
please go ahead.
lapses within organizations. As a closing sentence, there are lapses within organizations, sometimes intentional, sometimes non-intentional during the course of a financial year. But then the point is the onus is to discuss all this with the audit committee, the concerned accounts and finance departments, and to rectify. Yes,
Well,
yes, sir.
sir, principally, if we just appearance as a question is showing, it is probably looking as a clerical mistake during putting in figures on an Excel sheet or somewhere there, because this kind of mistake is not deliberate much. It's not looks that it is an intentional kind of an auditor that putting a depreciated value to the here to there. Probably, I understand this is a kind of mistake is some arithmetical or a clerical mistake has been done, which has been oversight or neglected during the time of framing out and finalizing the books of accounts and financial statement. So a different
One
view
thing,
should be taken. As I appreciate what Mridula is saying, we should go in that first in that direction. Then lately, if we feel that it is definitely a gross negligence happened intentionally, we should move forward for disciplinary kind of actions.
yeah. See, here we must understand the procedure. First of all, financial statement is prepared by the company. So company means board of directors and is the compliance officer, company secretary. Now, if it has come to your notice and you have pointed out to auditor and he is not rectifying, then what you are saying is justified. But if it has been overlooked from that angle, then together it should be resolved properly. It should have come to the notice of auditor also, that how can be your accumulated depreciation be more than your gross block. It cannot be. But put all the blames only on the auditor ki aapne why you have not done, it's not correct. First, must accept that it is company's responsibility to prepare accounts as per the accounting standards and everything.
Absolutely right, Nikhil. In fact, it is the primary responsibility of the company's management to prepare the accounts, and it is offered for the audit. As you rightly say, if the auditor come across things, he will definitely point it out. As you
Even
also rightly say, if the management come across something, then in such case, they have to rectify and give the revised accounts to them.
absolutely. Now there are provisions in the Companies Act to revise it.
Yeah.
But generally also that is what I find that like nowadays KMP CFO has to be there, but then there has to be some other provision that he has to be qualified CA so that he understands accounting standards. My experience is higher the level of the people, the least they know about the accounting standard, because they must have studied that during that CA exams they've cleared. But having into the practice, they have become more of a commercial. So if any amendment is there in the accounting standard, they are not even aware of. And whenever somebody points out to them that this is not, many of them do agree, yeah, what is the latest accounting standard, let us follow it. But many of them will say, नहीं ऐसा कहाँ होता है, without going into nitty-gritty details, नहीं ऐसा नहीं होता है. So that is the root cause of non-compliance with accounting standard.
See, one thing is there, Bala, you cannot simply say that it is the responsibility of the company to prepare the accounts. So they have to be more careful than the auditor. I don't agree with that. See, here there are two aspects out there. Number one, as far as the company is concerned, they have to prepare the financial statements. Whether accurate or inaccurate, that is a different thing. As far as the auditor is concerned, he is supposed to audit. And if any kind of deficiencies are there or inefficiencies are there, it is his duty to bring it to the surface. Wherever he has to qualify the report, he has to qualify that.
No,
Now,
Sudhakar,
if the
I am
shares,
also.
1 minute, let me complete. If the shareholder feels that there is a gross negligence on the part of the auditor, and if he finds that shareholder finds that there is a professional negligence is there, they are at liberty to approach ICAI or NEFRA. There's no problem at all here. Company might have been deficient in preparing the accounts. That is a different thing. Company will be taken to task separately. Auditor will be
No,
taken to
I am.
task separately.
So, Sudhakar, I only want to emphasize, you cannot hold the responsibility of the auditors for the accounts preparation by say, because the responsibility of the accounts preparation and presenting the thing based on the view is the company's responsibility.
1
But
minute. 1 minute. 1 minute. Here, this is the where I'm coming here.
yeah,
It is the responsibility of the company to prepare the accounts. But if in case there is a in preparation of the financial statements
yeah,
as required by the law,
yeah,
or to present a true and fair view,
yeah,
accuracy of the financial statement, this
yeah,
is the
that is to be
responsibility of
certified
the
by the
auditor to
auditor.
see all these things.
Yeah,
And he has
that
to
I
comment
agree.
about it.
That I
Yeah.
agree with you. That I
Yes.
agree with you. I'm not denying
That's
that.
what
That
I
I 100% agree with you. But where question is whether some, error has taken place because of the tabulation, etc., and other thing and all rectifiable or intentional, non-intentional, those things will arise. But the responsibility of certifying the true and fair view is rest with the auditors. He has to check with
Absolutely.
reference to the thing, and the company has to take the necessary action. I'm not saying that. I am only saying we cannot hold the auditor responsibility for preparation of the account. Accounts is prepared and offered for the audit to the auditor. Auditor has to go through and certify it. That's what I'm saying.
Yeah.
The next thing is the first auditor is to be appointed, the first board meeting within 30 days. That's what he also said, this slide also said. If the bank sanction is more than 50 crore, what actually
We
this,
have
I think we
discussed.
discussed this.
Yes.
Can auditor be appointed for less than 5 years as per the company sector, the private companies? And also if the auditor is appointed in a casual vacancy, whether his terms of 1 year should be considered for the next term of 5 years, or do we need to appoint the same auditor for 4 years? I think, in my opinion, if you are saying 2 terms not exceeding 5 years, if the company is appointing an auditor for a period of 3 years, that will be counted as 1 term. When you are appointing next term, whatever the period is, the not exceeding 5 years, that will be counted for the 2 terms. So he cannot be appointed for 3 years first, and after that 5 years, after that 2 years, that will become a 3 term according to me. Correct me if I am wrong.
No,
I
first of
also
all,
agree with you.
you cannot appoint less than 5 years. It is not like independent directorship. In case of independent directors, what you say is correct. Say, for example, an independent director can be appointed for a period of 2 years. It will be counted as 1 term. And another 5 years he can appoint, like that it is there. But as far as auditor is concerned, auditor cannot be appointed for a period less than 5 consecutive years.
But RBI regulation permits only 3 years
Exactly
of
like
That is
appointment at
different
a
thing.
time.
That is different thing.
Yeah.
Wherever the exemptions are there, for even the different regulators prescribe that, that is already, it is there. In fact, obviously that if RBI has to do that, then it overrides Companies Act. That is there. But in general, we are talking about, in general, you can't appoint an auditor for less than a period of 5 years.
But even in a section 139, subsection 1, it specifically says that auditor appointment has to be from first conclusion of the first AGM, then till 6th.
Yes.
Itself, it is showing that the period which Sudhakar sir told that it should be not less than 5 years. Whatever you are saying that it is RBI condition, it is a different regulator for different size and type of companies only. We cannot put this as a general law for all type of companies. All type of companies will have to be governed with this Companies Act only. And it specifically says that the auditor appointment shall be not less than 6 years, in concluding to 5 years from first AGM till the conclusion of 6 years. So I'm with Sudhakar said that the auditor must be appointed for 5 years in one term completely.
Okay.
Similarly, in fact, as Anuj rightly said that 139(1) says every company. So whether it is a private company, public company, whichever the company it is, you have to that auditor from this particular conclusion of this AGM till the conclusion of the 6th AGM. So every company means what? Whichever is the company incorporated under the Companies Act 2013 or the earlier acts, they have to appoint like that.
Okay. Auditor appointed
Even
the cash.
So
Yeah.
even in the casual vacancy case, when we are appointing somebody as a casual vacancy auditor for till the conclusion of coming AGM, that period shall not be counted for 2 terms. Up to my understanding, only because it is going to be appointed in board meeting or otherwise in EGM. Whenever auditor appointed in AGM, then it has to go for first 5 years, then next for next 5 years. Those terms will be counted as 2 terms.
Correct.
Yes.
You are absolutely right. Because the
Yes.
board appointment will not be counted for a term. That is right.
Yeah.
Yeah.
Right.
Yeah. Yes.
No, 1 minute. It is not board appointment. Say casual vacancy,
Yeah.
whenever
Filled
there
up by
is
the
there,
yeah.
of course, if it is a resignation, then of course it is a different. Even if it is a resignation, also shareholders might be appointing. Even then also it will not be counted.
But it is EGM. Law says that AGM has to appoint for 5 years. If
I
whenever we are
agree. I agree
appointing
with you.
auditor in EGM, it will not be counted as a term for 5 years or a part of that 5 year.
So
I agree with you, Anuj. I agree with you there.
So Sudhakarji, let me add an interesting scenario. Suppose auditor says resignation, saying that I am resigning. Let us take a current year case that he has audited for March 24, and he sends a resignation letter saying that I resign from the conclusion of the AGM to be held for financial year 23-24. So then somebody else is getting appointed. Can he be appointed for 5 years?
No, what you say is that the auditor, while he is resigning,
So let me put it. Somebody is already appointed, let's say for 5 years initially. 2 years, 3 years, or 4 years is already getting over on March 20. So after that, he doesn't want to continue for whatever reason, some reasons. Not that
so
he
after
has
5 years, you
any.
mean to say, sir, after 5 years, you
Before
mean to
5
say,
years,
am I
before
correct?
5 years, before 5 years, before
Okay, before
completing
5
5
years, you don't
years,
want to
you want
continue.
to resign.
Okay.
For a reason other than any friction with management or nothing like that, mutually he says, I do not want to do it now.
Amicably,
For some
mutually, he is
For
resigning.
the remaining term, then
for the
the
remaining term,
appointment will be
absolutely
for the
right.
remaining term. Yeah.
Exactly. So now he
Yeah.
has sent a
I have
resignation
seen.
letter which says I am resigning on the conclusion of the AGM, which is let's say held on 30th September 2024. Now this letter he is giving today, he is giving the letter, and then so that a board has started a procedure and found out a new auditor, he will be appointed from the conclusion of this AGM of 25th till 5 years, so 2030. So can it be done?
Yes,
If
sir.
we
Up
go
to
by
my
this,
This can be.
understanding, sir.
See, only issue is that in case of a listed company, there will be a problem. See, in case of unlisted company, there is no issue. But in case of a listed company, what happened is he has to what's called as an okay that limited review or the audited financial of the first 2 quarters. He has to conduct it. So
no, yeah,
he is
because of that. See,
that he has
I'll
to
tell
do it.
you, practically, this is what I have advised to somebody for the simple reason. He is already doing the first limited review. And then what happens, listed companies, sometimes something comes up in between, some certificates needs to be given only by the auditor. Now, assuming after doing first limited review, he resigns. Then what happens till that until somebody is appointed at the EGM or postal battle, that 1.5 month procedure, etc. is there. In between, there is no auditor. So suppose in between, because listed company, it is possible they have subsidiaries overseas, a lot of requirements of FEMA that these things you need to be certificate to be needs to be given by the auditor only. Now in the intervening period, there is no auditor. So I said you do like this so that in any certification comes, you have an auditor. Or in short, there is a continuation of the audit. That was the idea. So is it feasible now? Because technically what Sudhakar sir says that even at AGM, he is getting appointed for the resignation. So does it mean new auditor is only for 1 year and that will not be counted for 2 terms of 5 years? Just a
Is very see, that is very clear in case of a resignation of an auditor and you are appointing another auditor, you are not going to appoint him for a period of 5 years. You are going to appoint that auditor until the conclusion of the next annual general meeting, right? No, he is not there for 1 year. For 1 year, it may be for a few months or whatever. See, no doubt about it. Auditor is always for a financial year. But in this particular case, when you are appointing him for the next 2 consecutive terms of 5 years each, this particular period it will not be counted. That is what my view is. And if I'm not wrong, this is the, I mean, several companies have done this in the past 10 years like this also.
So can the new auditor be first of all appointed for 5 years? In this case,
Pardon?
can the new auditor be appointed for 5 years at the AGM?
Yes, why not?
Yeah, he will be
Why
appointed for
not?
the 5 years.
No,
because-
not in the AGM, not in the AGM, sir. I'm not saying, please. What I'm trying to say is,
Yeah.
say, for example, we are in the 24 now. If somebody is submitting a resignation, say, for example, in the month of November or December 24, if somebody is resigning in the month of November or December 24, then what will happen is you are not going to that gentleman will be vacancy is there. You are going to appoint that auditor up to the conclusion of the AGM, which is going to be held in the 25,
Absolutely.
right? Then, then that particular auditor, suppose the same person wants for the next 5 years, he is eligible for appointment for the next 5 years, and after that he is
Another
for appointment for
reappointment.
another 5 years also.
But Sudhakarji, my question is, and in this case, can he have 2 terms of 5 years because he's getting appointed?
Yes, according to me, answer is yes.
Yeah, absolutely. Any new auditor is appointed 5 years for a one term,
See,
5
here,
years for a
because,
2 term.
because there is no friction between management and auditor, I just advise them that let him resign like this so that you have no gap in between. So in between, if any requirement comes of certifying by the auditor, you have auditor, he will certify your certificate. Because many things, particularly in FEMA, it has to be certified only by the auditor.
Yeah, you
So
mutually
if no
can be
auditor
talk.
for 1.5 months, then you might miss those deadlines.
No, if you are having a mutual discussion,
Understanding, yeah.
if he is willing to continue, then that is okay.
Sir, one more, see, according to one more thing also you have to see. Number one, what is law? Number two is what is the practical difficulties? As I was mentioning to you, if an auditor is resigning, why I am submitting my resignation today, I will be laying down my office at the next annual general meeting. If it is a listed company, the way I am asking you, there will be a problem in certifying the second quarter accounts. So SEBI has said that if I am not wrong, that auditor has to qualify, certify the second quarter accounts also. I'm not very sure because
no,
right
new
now I
auditor
am
will
not,
do it because we have 45 days to limited review. So new auditor
yes,
will
exactly. You have to have 45
so
days
there is a
time, so new
continuity.
auditor will.
Absolutely, absolutely.
Correct.
So basically,
maybe
this advice is only from the point of view of continuity of auditor.
So maybe we go in a different direction also. Just I'm asking that what is going in my mind. In a case what Nikhil sir placed, that we just try to appoint an auditor by a board meeting somewhere in, say, in the month of July, and put his rectification in the upcoming AGM. And from AGM, we just made his office for next 5 years and then for next 5 years. So will that solve the purpose, what the problem Nikhil sir is facing? Getting me what I'm trying to say? That we are going to appoint a new auditor by a board meeting in the month of, say, July.
Okay.
And putting that appointment rectification within 3 months from general meeting. So will be in the month of September. In the September month, we rectify the appointment what board did, and we continue his appointment for next
See,
5
first of
years.
all,
And then
no, 1 minute. Anuj, first of all, let us not use the word rectifying the appointment. It is not a rectification. It is not a ratification also.
It's a subject to
In case of
approval.
a casual vacancy by way of a resignation, if it is there, the board has to appoint. Then they have to recommend to the shareholders for his appointment. So shareholders are approving the appointment in case of the casual vacancy, if it is by way of a resignation. Okay.
Sir, it is
Number
in
two,
90 days we go to shareholders for getting their approval, if I'm not wrong.
Yeah.
Right. So can we go by that way of getting his appointment done in this kind of company, and then for next 5 years, then
But then
next
under
5
Act, he is auditor only for 1 year. What Sudhakarji said is that will be applicable. He will be there till the next AGM only.
see, that appointment is an exceptional appointment, you can say. Not legally, you don't word it, but in another way, it can be taken. That appointment is only for under extraordinary circumstances. So according to me, that tenure is as 1 year for the purpose of 10 years. This is what my view is.
Anyway, viewers have enough food of thought for today. on
Auditor
this matter.
numbers.
I think we should move ahead.
Yeah,
Akshar
yeah.
has to cover.
Auditor numbers are referred for compliance. How the figure during the year to be confirmed by the certified or the compliance appointment. I think we discussed it. It's only he comes to know, or otherwise that is what we talked about it. A private limited company is having a working capital demand loan facility of rupees 100 crore as sanction limit, but the company has not availed the same. Does the company need to comply with the auditor's rotation?
My view is that unless you have utilized the funds, I mean, you have drawn down, it will not be termed as borrowing. You might have sanctioned, but if you do not actually use it, it's not a borrowing.
If the auditor is liable for rotation serving his second tenure of the auditor, change of constitution from the proprietary to partnership, then will he be disqualified for the third term or a new tenure will start?
Yeah, because if you have changed your status from proprietary to partnership, the partner will remain the common. So third term cannot be appointed.
The first auditor of the company will be appointed by the board of directors till the concurrence of AGM. Now, this appointment under section 139 will be made for the 5 years for the second AGM to the concurrence of 6th AGM. Is my understanding correct? Yeah, that is what that's what this explained also. Non-government companies include companies promoted by the government companies. These companies may not fall within the section 245 of the Companies Act 2013, but are otherwise deemed government companies. In these companies, CAG appoints regardless of the time limit. I think somebody has given the information.
No, what I can say here, government company means the government together holds more than 50%. Now, I have seen a case where government was holding exactly 50 and there was no CAG.
Okay. Secondly, ADT1 file is not filed. Then AOC4 and AOC4 XPRL cannot be validated. Hence, it is required to be filed irrespective of the first year or otherwise. MCA also in one of the webinar clarified that to spell the exemption from filing the exists. Yeah, this is what I was actually saying in subsequent filing when you say AOC4 XBRL. I think people.
Sir, it can be filed. Sir, it can be filed. It can be filed by that MCA has issued a Z999, a default kind of SRN number. By putting that number, you can able to file the forms.
It's being validated and everybody is doing it. There is no such issue.
Okay. So, if the tenure of the auditor is completed or the specific tenure of the financial year is mentioned in the AGM and the auditor is not filing ADT3 and not giving ROC to the new auditor, then the company may proceed for a new appointment by filing ADT1.
I do not know about the filing, but since he was appointed for 5 years, 5 terms are over, automatically he lays down his office. If he is not filing and files delay, penalty will be on the auditor.
Auditor
any view on filing? Mridul, if you have some different view on
filing. It is very right, sir. Nikhil sir, you said very well.
No, whatever you said is correct actually. ADT3 is not filed, that will be a non-compliant. Action will be taken by the regulator against the auditor.
And sir, I think that's a solution provided by the regulator, because if your outgoing auditor is not cooperating with you, it cannot hold your next audit appointment. And that's why the responsibility and the penal provisions for non-filing of ADT3 are on the outgoing auditor and not on the incumbent.
MCA allowing you to put 2 ADT1. That's why, because they're not restricting you to filing another ADT1. If the outgoing auditor is not filing ADT3, you will be not restricted to file another ADT1 over the system. It is allowed to you. It is the primary responsibility of outgoing auditor to file ADT3.
Yeah,
whenever he is resigning and getting vacate the office, it is the duty of the auditor only.
And recently, MCA has heavily penalized. There are cases that ADT3 heavily penalized.
Ma'am, we dealt with many cases where auditor got a penalty of lakh rupees in a single company.
Yes. So, Nikhilji, you would know your chartered accountant fraternity has become very proactive on this front that ADT3 must be filed.
And within time, even in a delay cases, ROC has penalized the chartered accountants.
penalties,
Yeah,
heavy
yeah,
notices.
absolutely right. There are a lot
Yeah.
of decided cases are there. Yeah.
Yes, yes. Okay.
Okay.
So should we move ahead with the presentation? We spent a lot of time on these questions.
I think it's yeah. Let us see this. Auditor
Yeah.
must share all the observations of the audit committee. Onus is on the audit committee to ensure the proper disclosure, reporting, and finally it is the board of directors to take the decision in the regard. That is the information I think. What
Yeah,
is the
that's
annual?
correct.
What if the annual general meeting fall within the 3 months from the then whether the casual vacancy recommended auditor by the board entitled to conduct the audit and sign the financial statement in the extraordinary general meeting is required to be conducted in order to empower the auditor to conduct the audit and sign the financial statement.
Sir, in the AGM only we can appoint the board appointment validate in AGM only, and then we again reappoint the auditor in that particular AGM. No need to go for EGM, because it says in a general meeting we have to go, we reach to the shareholders within 90 days period and get an approval for the appointed auditor was appointed by the board of directors.
Lack of providing information also one of the reason. I think this is probably the resignation reason somebody is actually sharing. Okay. Private limited company can have auditor can continue for any number of years.
Yes, if they don't fall into the rotation regime.
Okay.
Sir, but subject to that limit as defined in the rotational period, specified that as what we discussed, term this borrowing of 50 crores has to checked for private companies also.
Okay.
Apart from that, there is no condition for getting rotation of private limited companies auditor.
Somebody is sharing. Brightcom is the recent case of the auditor's resignation.
The next 2-3 questions are on removal of directors, removal of auditors. Rather, Akshar can take us through these slides on removal provision and
Okay,
doubts.
sure. Yeah, sure.
This is important, removal of auditors.
Yeah.
Akshar, please continue.
Yeah. So section 140 subsection 1 says about the removal of the auditor before the expiry of the term. So auditor can be removed before the expiry of the term by passing the special resolution after obtaining the approval from the central government, that is the regional director. So for that purpose, the company has to file ADT to removal of the auditor, and then once the regional director approves the removal of the auditor, then company has to conduct the EGM within the period of 60 days from the date of receipt of the order, and then after passing the special resolution, the auditor can be removed. Next slide. Yeah. So resignation by auditor. So whenever auditor puts a resignation, then in that case, the auditor has to file the form ADT 3 within 30 days from the date of resignation. While giving the resignation, he has to specifically mention the reason for the resignation and all the fact for his resignation, and that will be he has to attach also into the ADT 3. So this is the provision for resignation. And the section 140 subsection 3 says about the penalty for non-compliance. So if non-compliance is within section 140 subsection 2, then the penalty amount is 50,000 or amount equal to auditor's remuneration, whichever is less. If the failure is continued, then the 500 rupees per day will be the penalty, and maximum penalty for the continuing failure is up to 2 lakh rupees. Next. So this is the case for the startup Byju's. I think Bala sir has already discussed that in this case, what happened was the Byju's did not prepare the financials account and following the standards, and they did not communicated about the financial revenue recognition process, everything to the Deloitte, who was the auditor. And after after sometimes when there was a delay, Deloitte upfrontly just resigned due to non-cooperation from the company, and they, as company, did not provided the financials on time. So Deloitte's decision was driven by the lack of communication and the necessary records, preventing them from performing their audit duty. And the action underscores the responsibility of the auditor to maintain the independence. And this shows that how these audit firms are now performing, and they have just resigned because the company was not providing a proper documentation. And later on, the Byju's appointed a BDO as their new auditor for the for the financial for March 2022. Next. Yeah. So section 140 subsection 4 applies when the company actively seeks to replace and not reappoint the retiring auditor, even though he is eligible for the second term, ensuring the transparency and the fairness in such decision. It allows the retiring auditor to respond if they believe the removal is unjustified and ensures the members are fully informed before voting. This section specifically for the case with a potential conflict or dispute over the reappointment and does not apply if the auditor retires voluntarily. So it says that the special notice is required to be required for the resolution at the AGM to appoint a new auditor or prevent the reappointment of retiring auditor. The company must promptly send a copy of this notice to the retiring auditor that they are not willing to reappoint them as an auditor. If the retiring auditor submit a written representation within the time, say within 2-3 days, then company should try to send those representation also to the shareholder along with the notice. If the representation they received after dispatching the notice, then the representation should be read out at the meeting. The tribunal may waive the requirement to send or read out the representation if they find that auditors is misusing this as its right. Then tribunal may waive off, but company has to file the application to the regional director. Next. So section 140 subsection 5 says the removal and disqualification of the auditor for fraud. Under section 140 subsection 5, an application to a tribunal can be filed by the central government or interested party or shareholder or a creditor of the company or company itself or its director if there is a suspicious or evidence of the fraudulent activities involving the auditors. So the tribunal can order and removal of the auditor if it finds evident that the fraud or collusion in the fraud involving the company, its director, and the auditors. This action can initiate either by the tribunal or through an application from the central government or the interested party. If the central government received the request for the removal, the tribunal must act within 15 days to remove the auditor and may appoint a replacement. An auditor found guilty by the tribunal is disqualified from being appointed as an auditor for any company for 5 years. The auditor may also face further legal consequences of their action. If the complaint is filed to an institute also takes the action and they ban the auditor for a period of say 6 months, year, or 2 years. So this is even institute also takes action. This disqualification applies to both individual auditor and audit firm, with the liability extending to all the partners involved in the fraud. So this section applies when the auditor is also involved in the fraud with the management or the company. So that time any interested party can file application and start the removal of the auditor. Next. Sadamji, next. Yeah. So section 141 says the eligibility, qualification, and disqualification of the auditor. So 141 outline the eligibility, qualification, disqualification of the auditor. Qualification required under the act is that he must be a member of the Institute of Chartered Accountants of India. And disqualification says overall it's a conflict of interest, financial dependency on the company, or criminal conviction impacted on the auditor. The purpose of this section is to uphold the integrity of the financial reporting and maintains the stakeholders' trust by ensuring the auditor meets the high standard of professional ethics. Next. So this is the overview of the section 144 about the auditor's qualification, disqualification, and eligibility. Next slide. Eligibility for the appointment. So only the chartered accountant can be appointed as an auditor. When a firm, including an LLP, appoints an auditor, only those partners.
Chartered accountants.
So when the firm, including an LLP, is appointed as an auditor, only those partners who are chartered accountants are allowed to act and sign the audit documents on behalf of the firm. Even if the other partners are qualified CA or MB in this LLP, That time taking the assignment, only the auditor who are a chartered accountant can accept and sign the audited financials. Section 143, 141, subsection 3 says the disqualification for the appointment. So these are the basic disqualification given that they should not be officer or employee of the company. Their relative is a director or key managerial in the person in the company. They or their relative partner is indebted to the company for the amount of say exceeding 5 lakh. They have provided any guarantee or security in connection with the third party indebted to the company. They have business relationship with the company.
So
Next
wait,
slide.
Akshay.
Yes,
Wait,
just
wait.
I
So
would
here,
like to mention.
let's go to the previous slide. This is very important, and someone has raised this question also. There's a flow of questions that what constitutes conflict of interest uh, for removal of a director. So here are the cues. These are all situations of conflicting interest only.
Yeah. And
Yeah.
once appointed,
Yes.
and if you acquire disqualification, you cease to be auditor immediately.
Yeah, that is right.
Yes, there is no
Immediately you
question
cease to
of
be an auditor.
resignation or anything.
Yeah.
Yes.
Sir,
Then
especially in
look next slide.
141 subsection 3 1D, there is a provision where if a auditor is holding a equity in that particular company which is having a face value of rupees 1 lakh, and say supposing that company issued bonus shares and you get holding more than the threshold limit of 1 lakh, then you must be having a 60 days time to make rectify your disqualification in that period. If you draw your limit of 1 lakh, more than 1 lakh shares to less than 1 lakh shares, then you can continue as a share direct auditor of that company. Otherwise, you have to withdraw. You will be disqualified after the period of 60 days. This is a very important provision because one in my company case, the auditor is holding a share in that particular company, and due to merger, the value of those shares got become more. In that situation, we were just worrying that how to deal with this situation. So finally, we get transferred some of those shares to somebody else, getting the value less than rupees 1 lakh, and then he only able to continue as a auditor of that particular company.
But you also
Yes.
have to adhere to the code of conduct of the institute, which might be more stringent than this. I think recently 2 years back they've come out with a new code of conduct. So over and above this, you have to also observe those.
Yes, Akshay, continue. Akshay.
Next slide. They have been convicted for an offense involving a fraud and a period of 10 years has not been elapsed. They hold a security of the company exceeding the face value of 1,000. So these are the disqualification given in the section. Rule 10 further gives a more disqualification detail that securities and holding. A relative of an auditor can hold a security in the company, but a value must not exceed 1 lakh rupees. If the relative acquires a security beyond this limit, auditor must rectify the situation within 60 days. If the auditors and the relative or partner owe more than 5 lakh to the company or its associates, if the auditor has given any guarantee security for someone else's debt to the company or its related entities which exceeds the amount of rupees 1 lakh, the term business relationship exclude the professional services permitted by the law and ordinary commercial transaction at arm's length price, such as a routine sales service taken from the service sector like telecommunication, hospitalities. So these are the disqualification given in the Rule 10. Next. Section 141(4) Auditor's disqualification. Where a person appointed as an auditor of the company incurs any of the disqualification mentioned in the subsection 3 after his appointment, he shall vacate his office as such as auditor, and such vacation shall be deemed to be a casual vacancy in the office of the auditor. So whenever the auditor hits any disqualification, he should immediately resign, do a resignation, and that resignation will be considered as a casual vacancy. Section 142.
Sure, one main thing is that when we are talking about the securities, if the auditor, if he is or his partners, they should not hold a single share in the company in which they are doing the audit.
Yeah.
That threshold limits are there only for the relatives, not for the partners as such. Number two, the auditors are not supposed to hold the shares not only of the company, but also of the holding subsidiary and associate companies also.
Yeah.
Most of the times it happens that the CFOs, the company secretaries, when we are taking care of that thing, that we ensure that disqualifications are not there and all, but most of the times it slips that the shares held by them in the other companies, if it comes to your knowledge, and it should be after his appointment, if you come to know about it, it will be a big problem for you how to remove them because they become disqualified. So one of the SOPs whenever we prepare about the audit checkpoints are we have to also see that partners should not hold a single share. As far as the relatives are concerned, no doubt about the threshold limits are there. Anuj has rightly mentioned that whenever there is a corporate action takes place, like a bonus issue or a kind of, that your merger, demergers happens and all those things, because of that, these threshold limits are going to be disturbed. Then within 60 days, the remedial action is to be taken. So this is a very important point one has to take into account.
Sudhakar sir, one more query just arose in my mind that as we saw, section says immediately at that point when you reach to the disqualification, you have to vacate the office. But especially Rule 10 says that you got 60 days time period. So is this not contradicting with each other? Means what to do in that kind of situation when we are just over going to the threshold limit, and either to vacate or to rectify that situation to overcome back to the real situation or the allowed situation. What to do at that particular point, sir?
See, because any kind of default, if it is not because of you, it happens because of a corporate action taken by the company. So then the leeway what has been given, within that leeway, if the remedial action is there, there should not be a problem according to me.
Sir,
Say, for
but
example,
141
if the
says that immediately you have to vacate. 141 says immediately you have to vacate the office. And 140 Rule 10 says that you have a time of 60 days. This is something which is just
so
putting a confusion
no,
in my
no,
mind.
that immediately means that we have to interpret the act harmoniously. If one way you have been given a leeway, another place it is there like this, that means it's not because of corporate action, right? You have department and okay that to trigger the threshold limits, you have crossed it, then immediately it will have that disqualification will happen. There you cannot avail that 60 days things. That 60 days will come into picture, which is not that threshold limits you have not crossed because of your own actions. It is because of the corporate action. Then you cannot, help that. That's according to me. There, the 60 days leeway you can, avail it. It will not, your disqualification will not trigger automatically.
Right, sir. So is specifically 60 days time period is given for that limit of 1 lakh only. In other conditions, there is no limit and no privilege has been given.
Correct,
That-
absolutely right.
Correct.
Absolutely right. You are right.
Absolutely.
Absolutely, you are right.
As I told you, Anuj, when I use the word corporate action means any action which is beyond your control. If it happens that 60 days leeway is there, suppose if you are giving a guarantee, if you are giving a security, if you are incurring a debt, obviously that it is your own actions. There immediately the disqualification gets attracted.
Law is very clear that if intention is bad on the part of auditor, you have to vacate immediately. If someone else action you are trapping into the threshold limits, then you have a time of 60 days period.
Correct.
Correct. Understanding is correct. Yeah.
In fact, at one point of time, somebody asked me another question, that which may be, is whether all these provisions, right from section 139 and all others, is it applicable only to auditors, means even secretarial auditor also? My understanding is no, it is not so. These sections are applicable only to the statutory auditors of the company. Auditor means always it is a statutory auditor, not secretarial auditor.
Exactly, sir. I agree with you.
Secretarial auditors holding the shares and all, though it is a conflict of interest, governance point of view, there may be an issue, but statutorily they will not be debarred because these particular disqualifications are not attracted to secretarial auditors.
Basically, the law defines what auditor, and auditor, they are just including the chartered accountants only.
So
Not chartered
auditor
accountants, statutory auditors. Let us put it this way,
Yeah, so
statutory auditors of the
I should
company.
correct myself. It is a statutory
Who
auditor
are
there.
by
Exactly.
default, they are to be chartered accountants.
Exactly, sir.
Yeah. Yes, Akshay,
please
move
continue,
forward.
Akshay.
So section 142 says about the remuneration of the auditor. So 142 subsection 1, fixing of the remuneration. The auditor's remuneration will be fixed in the general meeting. Uh, Board may provide the remuneration for the first time when they appoint, because the member's intervention is not there. And section 142 subsection 2 says that the auditor's remuneration include not only the audit fees but also expenses incurred during the audit to perform that audit. However, it excludes the services auditors might provide at the company's request. For example, if banks ask some certification to be taken from the statutory auditor, or sometimes exporting or importing some material, that time also there is a requirement to take the audit certificate, some certificate from the statutory auditor only. When some company make the investment to outside the India, that time also statutory auditor has to give some certificate to RBI or AD Bank. So when those fees are excluded from the audit remuneration, but any expenses which is in connection to audit will be a part of the audit remuneration. Next. Powers.
Only one point, Akshay, if I am not wrong, even if you are making some payment for the purpose of certification also, that the board has to approve the total expenditure, how much is his remuneration for the audit purpose, and similarly for certification work, how much you are paid for that.
Yeah, that
Reimbursement of
is
expenses need not be approved by the board, but otherwise every other thing is to be approved by the board.
not only approved by the board, even it is disclosed in the balance sheet also, what is the audit fees, what is the non-audit fees, that is a disclosure requirement is also there. Yeah.
Yeah,
Disclosure is irrespective of whether approval is required or not.
Yeah.
Suppose approval is not required and it is paid, which is in compliance with the law, but that disclosure under that Schedule 3, etc., that's a different part and it has to be.
Yeah.
Yes, sir. Exactly. Go ahead.
So section 143 speaks about the powers and duties of the auditors and the auditing for the auditing standards. So section 143(1) gives a right to access. The auditor of the company shall have a right to access all the time the books of accounts and vouchers of the company, whether kept at a register office or elsewhere. Company must ensure that the auditor can thoroughly review the financial record to perform their duties effectively. 143(2) says about the audit report. The auditor shall make a report to the members on the account examined by him on every financial statement in the AGM. Act mandate the comprehensive report by the auditor to the shareholder, ensuring the transparency in the audit report. Section 143 3 read with the Rule 11 of the Companies Audit and Auditors Rule 2014, contents of the audit report. The audit report ensures that all the critical aspect of the company's financial health is covered. It shall include the specific points such as whether they have sought and obtained all the information which are required, whether company has a proper books of account as required by the law have been kept, whether company has a balance sheet and profit and loss with a proper accounting standard. Further, section 143 subsection 1 requires the auditor to express their opinion on the adequacy and effectiveness of the company's internal financial control over the financial reporting. So it's the IFC report that also auditor has to confirm and mention in the audit report. Next. Section 143(4) report by the audit.
1 minute, Akshay, can you please go to the previous slide? See here, when the auditor, no doubt, he is having the access to account, he is having the access to all the records, so that it enables him to complete the statutory audit. It is observed that sometimes the auditors, for the purpose of the peer review, they have to also have the backup papers. So they ask for the of the minutes, photocopy of the minutes book, of the board meetings and audit committee meetings, sometimes other also. Here, whether the company secretary can refuse give the photocopy of the board minutes, answer is yes. Because if at all they want to have it to have what's called backup documents, you can take extracts of the resolutions, certified copies of that. Say, for example, 186 limits are there or 185 or whatever the resolutions passed by the board or by the shareholders. That for the purpose of peer review, if you want it, you do give certified copies. But according to me, we should never give photocopy of the minutes of the meetings, whether it is of the board or of the board committees, to the auditors. At the same point of time, whether it is an auditor or even a secretarial auditor also, they should not ask for the photocopy of the minutes completely, because there may
100%.
be some confidential discussions may be there, in the preamble to the resolution and all. That it should not be a kind of a public document.
100% you're right, Sudhakar, actually. Minutes per se, as you rightly said, should not be given. And second thing, even for the purpose of audit, whatever you said, which is relevant, as you rightly put it, that only has to be given as a certified copy or extract of the minutes. That only has to be given. That is the thing which has to be followed. But unfortunately, in practice, many private companies and other thing and all, left and right, they are sharing the minutes. That is also there. Nikhil, what you say?
Yeah, as a
Asked to
part of
review and-
part of our audit procedure, we go through the minutes. And as
No, no.
Sudhakar rightly said, like certain limits, like you're borrowing, suppose some resolutions have been done at the AGM, then we take action. We take the
The
action.
company secretary is in a duty to just put a review by the auditor and their team for all complete minutes, but you rightly said that not required to put all minutes copies to the auditor. They can
Correct.
just review during their audit time and process when they are visiting to the registered office for viewing the document and reviewing all things. This can be done. This is allowed, and this they can ask to us, and we have to follow that.
Yeah,
They
you can
need
show the minutes,
all
but
minutes,
no giving the
They can show
photocopy
minutes.
or not giving the things.
Yeah.
Yeah.
Because in their audit report they has to mention that all compliance regarding the minute book
that is
notices
right.
has been followed. So only when we just put all document before them that this compliance has been done with time and in compliance of law, then only they can report for that.
Correct.
So as a part of duty as a company secretary in a company, we need to put all records before auditor for reviewing and their satisfaction, but not need to do copies as Sudhakar
Yeah,
sir
that is it.
said.
That is the only point. Yeah.
Yeah, right.
Yeah. Go
So,
ahead,
so-
In fact, though we will discuss when we will discuss the secretarial audit, that point of time we will discuss in detail. But what is observed is that normally statutory auditors take a management representation letter.
Yeah.
In that management representation letter, statutory auditors take a lot of things from the company. Even secretarial auditors also started taking management representation letter, in which they say that it is about 8 to 10 pages management representation letter. They say the company has complied with loss to the company. The company has maintained proper minutes. The company has maintained proper books of account. So, in fact, at one point of time, I asked, when I was in Reliance, I asked the secretarial auditor who was asking for this kind of a certificate. Look, we will give you the management representation letter only for those things which you are not able to inspect. Say, for example, the company has maintained the proper books of account. Yes, we will give you that. The company has exhibited its name boards and all at all the branches of the company. We will give you that. But the company has maintained proper minutes books and the company has complied with the Companies Act provisions or the secretarial standards. That is you to examine that, not a management representation letter.
Very right, sir.
You know.
Then what is your duty left to check?
Correct, sir. Correct. Absolutely right. Congrats.
The auditor has
And
this duty and we are getting a
how many
representation from
companies
management
can
for
do
just
that?
verifying that.
And how many company secretaries can speak like Mr. Sudhakar? So that is the question, a debatable question.
No. You see, the brutal question is not that. Question is, it is for the benefit of the participants because several people might be statutory auditors, might be secretarial auditors or auditees. I'm telling for both of them also because these management representation letters and all, it is only for eyewash. It is only to satisfy yourself. Tomorrow, God forbids, if secretarial auditor's role or the statutory auditor's role comes to the scrutiny by the NEFRA or by the respective institutes, these representation letters are not going to give you any kind of protection. So what one has to do is, by wherever you have to discharge your professional obligations, you have to discharge it, irrespective of the management representation letter. That is only maybe a kind of comfort, but don't make one should not make a mockery of that. By that section wise, if you are taking a certificate from the management, I have complied with 186, I have taken the special resolution, I have taken this, I have taken that. Then what kind
Standard.
of an audit you have done? That's all
Sir,
right.
on the contrary, off the record, I am just putting one more thing that by the management representation, on getting management representation by auditor and secretarial auditor, being a secretarial auditor, I am sharing my personal experience. Many times, management is more comfortable in putting management representation to you rather giving you records for making a questions over it. This is
Correct.
also another story or other side of the coin that we have to go by that, because many times management do not want to share records before you, because maybe they are not prepared, maybe they are not complied, maybe a number of reasons you can find, and they are more happy to give you a management representation and you just sign this, give me the report and do the compliance done. This is also a
Yeah,
challenge
in
what
fact,
we are facing
in fact,
regularly.
Anuj, you have brought a very good point. In fact, you brought a very good point. If the gullible management is there, they may say, okay, I will give you a representation letter. You don't need to check anything. Then auditor will be in soup. God forbids if something happens tomorrow. You know, you brought a very good point. In fact, I appreciate that.
Thank you, sir.
Akshar, I think we hardly left another 10
Conti-
minutes. I don't know whether you'll be able to complete.
Yeah. So next slide. So report by the auditor to the director. It says that the auditor must report to the company and its member on the financial statement presented at the general meeting, and report should contain the true and fair view, detail of any non-compliance, whether standards are followed or not, and any fraudulent activity has been observed by the auditors. An auditor, any discovery of fraud must be reported to the board of directors. And once it is approved by the members, we have to file the AOC 4. So audit of the government companies, the government-owned control companies, including those partly owned and by the central and state government. The CAG of India appoints the auditor and provides a directive for the auditing the company's account. The appointed auditor submits the audit report to the Comptroller and Auditor General, and report details about the audit findings, detective issued, action taken has to be mentioned in the report, the financial statement. Section 143, 6 and 7 applies to government companies where the CAG can specifically do a supplementary audit, and then they can publish the findings, and they can also do a test audit for in the publicly interested companies, so central government companies. Next. Audit of the branch account. So here what it says, a branch audit can be conducted by the existing auditor, or they can appoint another auditor for the branch. All the section on terms of appointment, rotation, whatever we have discussed earlier will be applicable to the branch auditor as well. And the branch auditor has also same rights and duties of the of the main auditor. However, the main auditor will be held responsible for the final audit report. So it's auditor's duty to get all the details and reporting from the branch auditor. The duties and power of the auditors with reference to audit of branch is the same that we have already discussed. Even the branch audit finds some fraudulent activity in the branch audit, then they have to report it into section 143.12. So it is not only the main auditor who will do a fraud reporting under 143.12. 143.9 section says that auditing standard needs to be followed by conducting the audit. Next. Yeah, so 143.10 speaks about the authority to prescribe the auditing standards. So it's a Institute of Chartered Accountant in consultation with the NAFRA who prepares the auditing standard and publish it. Section 143.11 says the order for specific statement. So the central government has a power where they can mention any additional specific statement that the auditor needs to report in the auditor report. For the main known case is the CARO reporting, CARO 2020. So under this section, it is instructed by the government to report the CARO report in the auditor's report. So this section empowers the government to do any additional reporting. Next slide. Section 143.12 says about the reporting of the fraud by the auditor. So if an auditor suspects any fraud involving the prescribed limit, that is more than 1 crore, in that case, auditor must inform the same to the audit committee of the board of directors. And if of the company, and if it is less than 1 crore, in that time they just have to take the they have to inform the board and the committee and mention in the audit report. However, the fraud is involved more than 1 crore. In that case, they have to take the report from the audit committee and action taken by the audit board of director, and what are the scenario. And after getting the reply from the board, they have to file the ADT 4, which is filed offline, and send it to the central government Delhi MCA, reporting the fraud in the company. Next slide. So whenever the fraud involved amount is more than 1 crore, in that case, the auditor has to give a 45 days timeline to the audit committee and board member to reply that what had actually happened and what the reason, etc. And then they have to inform it to the central government in ADT 4. Next. So 143.13 gives relief to auditors whenever they report any fraud about the company to the central government. So that time it won't be considered as a violation of their duties, and as they have done in the good faith of the investors and the shareholders. Section 143.14 says that the provision of this section. So provision of section 143 is applies same to the cost accountant and the company secretary who are doing a secretarial audit under section 204. So even the company secretary at the time of doing the audit, if they also find the fraud or some kind of thing in the company, they also have to file the form ADT 4 to the MCA.
And actually, this is a physical filing form for ADT 4. I think up to my
it's an offline form. You will not get it online.
Yeah, online it cannot be. You have to actually make it in a particular format. You have to send it by the speed post for the designated address. That is what it is mentioned there. Yeah.
Yeah. Penalties for non-compliance of section 143 for listed company is a 5 lakh, and for other companies the 1 lakh. Next. So these are the section 144 says that whenever the auditor is appointed for a statutory audit purpose, they are not allowed to give the following services like accounting and bookkeeping, internal audit, actuarial services, investment advisory or investment banking services, management services, or as may be as other service as may be prescribed in future. So these are the services which the auditor cannot give along with the statutory audit. Next. Next. Section 145 says that a person who is appointed as auditor will only sign the audit report, or we can only authorize the auditors to sign the audit report, maintain the accountability. So only the person who has been appointed as an auditor in a firm, he will only sign the audit report whose name is mentioned. The auditor to attend the annual general meeting. The auditor shall attend either by himself or through his authorized representative who shall be the qualified to be an auditor any general meeting. Auditors are available to answer shareholders' question and provide the clarification at the general meeting. So section 146 mandates the auditors to attend the AGM. Next.
Here we need to take more emphasis on 146 especially, because usually what happened, being an auditor involved in many companies audit, and particularly 29/30 is the usual date of September for holding an AGMs. So it is better to avail exemption by putting a leave of absence in writing from the auditor side to the company that we are not able to attend meeting due to preoccupation or due to giving a reason, whatever they feel okay. But it is needed to be filed and placed with the board of directors that they're allowed not to attend AGM. Because section 146 specifically says that every auditor has to attend AGM who is doing audit. And usually what we see, there is a lack of piece of paper kind known as leave of absence is not requested, not granted. So I especially mentioning that whosoever is doing audit, either go to attend the AGM or otherwise request to grant leave of absence.
Anuj, say secretarial auditor, still it may be, but as far as the statutory auditors are concerned, I don't think that the company should give that kind of a this thing, and even the auditor should not ask for that kind of an exemption. Because approval of accounts, that is a major thing. That is the main item. How can the auditor seek exemption from attending the AGM, and how can the company give that kind of a thing? then no auditor will attend and the company will say, look, we are not interested. You are giving an application, I will give you the exemption.
But practically it is happening, sir, because auditor is doing audit for 50, 40, 80, 100 companies and they're not able to reach to all
They are
Yes,
AGMs.
not
sir.
able.
Let's say
Yeah.
even if
In
he's doing
case of
audit of 10 companies, all the 10 companies hold AGM on 30th September morning 10 a.m. He
Yes.
can't reach everywhere, no? Geographical distance.
sir,
Practically,
only
this
thing is,
situation
Something
arises.
practically has to be understood and considered, sir. Up to my mind,
and please
there should
remember one thing. Please remember one thing, Anuj. If it is a listed company, please remember that this
They have to, yes, we attend.
agreeing, sir.
see that
Agreeing. You have to get a prioritize on a company's say stake involved. If you're doing a listed company, then you have to attend that. If you're
No,
at the
and-
same
Or you
time,
should send your authorized representative. The law provides you with that provision also. But sir, practically, na, I don't know what to say on a public platform. But it happens that neither the auditor nor no one is available
The listed
for
companies we
whatever
do attend,
genuine.
and now it is on audio visual mode, so easier to attend. Even if some geography one is 10, second
Yeah.
is at 12, we can attend both. But
So then
earlier
we
when it was a
advise
physical
if
mode, you won't reach only. That was the practical
if you're
difference.
not able to attend, at least for the company secretary department, the documentation should be complete. Those who do not understand, please have proper letters. Email communications are also allowed. But the absence, the reasons for not attending should be duly recorded for your own governance and
And in case of
accounting.
private limited, we
I
don't know
know
when
that
they are having
law doesn't give
AGM.
you any exemption. Law doesn't give you any exemption, but at least you can put your incapabilities of why you are not able to attend the AGM, because all AGMs are equal as per law. It is not defining that it is a listed company, it is a private company, it is a closely held limited company. All companies are equal as per law. That is you to give a priority to which company you need to attend or you are able to attend, and otherwise you have to at least put a leave of absence or just ask to the board that we are not able to attend the AGM. And that is happening, sir. That is happening altogether, sir. Off the record, I am
Auditors
saying this.
also
It is
cooperate.
happening.
I've seen they cooperate. They also have genuine reasons only when they're not able to do, but then documentation is ensured and they assist with that. They cooperate. So anyhow, Akshar, continue.
Yeah.
We can quickly, you can quickly flip through. These are all now not,
It is already 1
revisions.
o'clock. It is already 1 o'clock, actually. Yeah.
Punishments, penalties, I think you can skip.
Next slide.
You can skip.
Yeah, sure. So auditor's report should contain the introduction of the company, scope of the audit they have covered, their opinion, whether it is clean, unqualified, qualified, and they have to mention everything what they have observed during the audit. So this is what the auditor's report should mention. Next slide. Applicability of CARO. So CARO is CARO has some applicability that it applies to all the company except the banking, insurance company, company registration, the charitable purpose, OPC. However, the CARO is applicable based on some threshold limit of turnover of 50 crore. If they have taken a loan or borrowing is that exceed 25 crore, or they paid up capital of 1 crore, then auditor of the company has to consider the points given in the CARO and they have to report on the CARO reporting as well. So next point. Next slide. So CARO covers basically about the company's fixed asset, inventory, loans and advance, whether it's to comply with the Companies Act or not, internal control system is there or not, company has taken deposits or not, cost record. They have to report about the statutory dues, which covers the PF, ESIC and other laws as well. Repayment of loan, any default made in repayment of loan, related party transaction, preferential allotment made during the year, fraud reporting. So under the CARO, auditor has to report for these points as well. Next slide. SEBI LODR guidelines specifically mention rules relating to the appointment of auditor, which we have already discussed that it should be peer reviewed, and the main guideline says that the annual report must include the detailed section of the auditor's observation and management response to them. This ensures that the shareholders are informed about any concern raised by the auditor. So this is a different than the we have seen in the normal Companies Act, where the auditor has to specifically mention about the concern and the response of the management in the audit report for the listed companies. Next slide. So NAFRA is the agency. It's an independent regulatory body which was incorporated established under the section 132 of the Companies Act itself. And its main purpose is to enforce the regulation and bring the discipline in the auditing standard and creating the transparency in audit reporting and financial reporting. NAFRA can investigate the professional misconduct by auditors and impose the penalties on them. NAFRA also monitors the compliance with the auditing standard and ensures that audit firm meets the quality requirement. NAFRA also plays the advisory role to central government in matters relating to the accounting standards. Next. So main scope of the NAFRA is to audit, quality review, regulations and monitor. It has investigation power to investigate any audit or audit firm. It impose the fine, suspend, debar the auditor from the auditing based on their finding. It can recommend enforce the auditing standards in India. It publishes the results of inspection and disciplinary action taken by them to maintain the transparency. Also, NAFRA can proactively investigate the companies without any complaint, receiving any complaints on suo motu basis. And below is the link given where the recent orders of the NAFRA is already listed in their websites, which they have taken against the auditing firm. Next slide. So this is the case of the PNB Housing Finance Limited, where the NAFRA has initiated the inquiry without any complaint being received by them on the basis of their market intelligence and the information they have. And they have found out that there was a misstatement in the financial statement, inadequate disclosure of the related party transaction and improper valuation of assets. And for that, they have taken the action against the Grant Thornton, which was their statutory auditor, and they have prohibited them to do the further audit for certain period of time, 3 years. So this is what the action was initiated by the NAFRA proactively without any complaint. Next. Another case of the Deloitte, which
NAFRA is only applicable to the chartered accountants up to my understanding. As what I read about Rule 2D, it is only saying about that this is for the auditors as defined under Section 139 of the Companies Act. So up to my understanding, cost auditor and company secretaries are exempted up till date from NAFRA purview. Is that okay?
No, NAFRA is having a jurisdiction over all the three institutes.
But section
it's under
Rule 2D
Companies Act, so
specifically
whatever is
says about
covered in the
auditor. The
Companies
definition
Act.
of auditor doesn't include company secretaries and chartered these cost auditors.
No, say that when NAFRA was constituted, see that one part of it is no doubt in the Companies Act, but you see the NAFRA when it was constituted, it has been given jurisdiction over all the three institutes, all the disciplinary committee of all the three institutes. If anything goes to NAFRA, they have a jurisdiction on secretarial auditor also, if I'm
Well
not
agreed.
wrong.
Well agreed, sir.
No, I agree,
Rule
but some more
2
other,
specifically.
some more other, NAFRA has been dealing only with the statutory auditor so far.
Yeah.
They are not touched upon the other people so far. It has not come. So that is why
With
we
what
tend to think it is
intention they
only for the
created?
auditors.
Yeah, what intention they created is a story, but what law they depicted and is placed before the public, it only says that the auditor and auditor defined under Rule 2D, which says a person who is appointed as auditor under Section 139. So 139 says and talks about only the chartered accountants. Up till time, and my understanding is very clear that only the chartered accountants are coming in the ambit of NAFRA provisions. Company secretaries as well as cost auditors are exempted till date.
I cannot say exempted till date. I can say they are not touched upon till date. We'll have to wait and see. Yeah.
It was they have not touched upon the cost accountant and the company secretaries as of now, but it is covered.
In the definition part, they hadn't included those two bodies of profession.
So let's take the second case study of the
Vigilant time, and Akshar, you may proceed.
Yeah, Akshar, move forward.
So in the case of Deloitte was the auditor of the IL&FS Financial Services, and there also the case was of 2018, but NAFRA has initiated the case in 2023 again due to the new allegation. And the NAFRA's investigation they found that the auditors failed to maintain the professional skepticism and did not perform the adequate procedures to follow the to conclude their audit. And because of that, they have imposed a fine of 10 crore to the Deloitte, and they have banned the Deloitte to do a audit of the listed entities. Next slide. Next slide. Saddamji, next slide. So NAFRA's the impact of NAFRA is to enhance accountability, improve the audit quality, increase the investors' confidence and professional development, which will bring the more transparency and confidence to the shareholder while investing the company. And nowadays auditors are also very aware about the NAFRA's action, and they also don't take the assignment so easily without getting the proper information of the company before signing the engagement letter itself. So this is what the impact on the NAFRA on the Indian economy. Next slide. Yeah, so this is what the overall framework of the appointment of the auditor, the role of the auditor, their obligation, and the interference of the NAFRA on the auditor as the watchdog. So thank you. Now we can take the questions.
Yeah.
I would just like to add one more thing. Since as an auditor, what we are doing audit is of the financial statement. So financial statement includes standalone as well as consolidated. Now company secretary also are signing the financial statement. So they must understand when CFS, consolidated financial statement, needs to be prepared. Now lot of management, and they, due to ignorance or something, they skip and they don't prepare CFS. I'll just give you some examples. Now, for example, if you have invested more than 20% in an entity. Now, let us understand, Companies Act includes entities. So, entity means any kind of entity. It could be a company under the Companies Act, LLP, trust, or it could be a partnership firm. So, assuming that the company has 25% stake in a partnership firm. So, because of accounting standard, etc., in any case, profit from partnership firm gets reported in standalone in any case. But however, because of specific requirement of CFS, you also have to prepare CFS. There will be hardly some difference between the two in this particular case. But if you have a subsidiary, there will be a substantial difference because you do line by line consolidation. So your all PLN undergoes change, your balance sheet undergoes change, and the difference goes to the minority interest. So even if you are holding 20% or more into some other company, it becomes associate, and compulsorily you have to do the consolidation. So long as you are below the threshold investment of 20%, it is simply AS13, that is accounting for investment. Only when dividend is declared, you account in your standalone. But the moment you hold more than 20%, then you have to do consolidation. Similarly, if you have a joint venture, and obviously if you have a subsidiary, then also consolidation is mandatory. So don't overlook this point. That's it. Thank you.
Nikhil sir, but don't you think that many times we saw associate companies are not putting consolidation with their standalone balance sheets, especially for associate companies I'm talking, where this 20%
Associate company is not supposed to prepare the CFS. It is the person, means the company which has invested and investment, and it is called associate. So that holding company kind of a thing. The technical terms is not a holding company, but investor will have to do, not the investing.
I'm saying the same thing, sir. The company who had invested in another company is holding more 20 or more percent, usually not getting consolidation done. Only the subsidiary companies are doing so, and this is general practice in society. Many of chartered accountants are not getting consolidation for associate kind of companies. Is that okay? Because it is
No,
the
it's
most
not okay.
important.
It's not okay.
It is not okay. It is
Not
not
okay.
non-compliance.
I know, but
It does not give a complete true and fair view.
No,
In some
forget.
audits.
Ritold.
The true and fair view.
True and fair view of the CFS you have to give. You are not prepared CFS, which under the Companies Act. So your financial statement is incomplete.
Sir, give me one more minute only. Why I am saying in this issue, because this issue is very more important for our type of cities. Usually the chartered accountants belonging to these type of cities are nowhere doing that kind of consolidation for associate entities. We are pushing, but they are not doing, and it is general practice nowadays for last 5-7 years that they are not doing any consolidation. And society, management, regulator, all are accepting.
No, it cannot be. It
No,
cannot.
I cannot say
It cannot
regulator
be.
are accepting.
They cannot say you prepare, you give it here. We need
Regulator
audit.
is just keeping quiet.
Five
The
years,
one day or other it will
7
happen.
years, sir, in a
Anuj
5 or
ji,
7 years, no one is
Anuj ji,
giving question over it, then it means it is acceptable by society. It is
No.
generally accepted.
See, question is we have to see compliance and non-compliance. We'll have to see from the regulatory perspective. I don't know. Regulator will come one day or other. That is very clear. Okay.
See, here it is the duty of the board of directors to prepare the financial statement and get it adopted at the AGM. So that means board of director is adopting wrong financial statement. So first they will be held responsible. Auditor तो बोल के निकल जाएगा कि आपने मेरे को दिया ही नहीं.
Correct. That is right. Absolutely, you are right.
But then there should be some kind of recommendatory
No,
instruction
so
should be.
you prepare CFS, share with them, or when you are appointed, when you are appointing, you make it very clear that we have CFS also, you have to do it. See, because audit fee will differ. Because if I have to do only standalone and CFS, so while deciding, you say you have to do both standalone as well as cons, you have to do.
I think we are already running out of time. It is already 1:15.
There is 2 hand raises there we have, so let's
Acha.
encourage them. You know,
We will-
let's
we will,
Mr.
Yeah,
we will-
let us hear
Murthy.
it.
We will allow them to speak. Who wants to raise a hand, and then we can close the session. I think there are 2 hands are raised. One is Mr. Murthy and another is Anand Kumar. I hope they can unmute. They can talk. Any one of you, Murthy or Anand Kumar? Yes.
Sir, this is
Yes.
Anand Kumar, Chartered
Yes.
Accountant in practice. Yeah, am I audible?
Yeah, very much. Go ahead.
It's an excellent program and an eye-opener for many contraventions we observe in our real life, and we should travel towards compliance. As stated by Professor Balakrishnan, auditors should not be involved in account statement preparation. In fact, the independent audit report makes such a statement that it is the management's responsibility to prepare the account statements. An auditor is expected to use only his green tick or red tick and report, nothing else. But companies, especially small size companies, are making a lot of contraventions. It is better, all of them should realize the distinction between the corporate personality and the personal, individual personality, and uphold the corporate personality. Thank you very much for conducting a wonderful program, which I enjoyed listening throughout.
Thank you.
Yeah,
Sumit,
can I just supplement what he has said? Sir,
Yes.
you are practicing chartered accountant, so am I. Now, at our small level, what we have done among our friends, and as you rightly said, the small auditees have always that problem. So, what I have suggested amongst our friends, that if somebody else is a client, now you yourself prepare accounts and you yourself do the audit. So, you will not be able to spot the mistake of yourself. That's one reason. Secondly, even if you spot, you will not point out. So best is maker and checker concept is there. So what we suggest our client, our friend, that your client, you give it to me for preparation of accounts, pay the fees. Once we prepare it properly, normally that format and everything is there for next 4-5 years, unless there are few changes here and there it comes, right? So we do it, and charge the fees and we do it. And then it is easier for him to do the audit. Because प्रॉब्लम ये होता है कि इफ माय क्लाइंट if I tell him कि इसमें ऐसा, तो the first reaction will be, अरे सर लास्ट टाइम तो आपने ऐसा ही दिखाया था, why you are saying that? See, it's a natural reaction, you can't counter it.
So the Western world,
This way we'll move towards more and more compliance. That's what a small initiative we have done. Just practically I'm sharing. Thank you.
Yes, Smith. You can speak. Smith Jain. Not there?
Mr. Murthy.
Murthy, are you there? Either one of you could speak. I don't think so.
Let it be then.
Yeah.
So we can conclude, sir.
Yeah, I think we can conclude the session. Excellent presentation brought out by Arshad Patel. He, being himself is a financial person, I must appreciate the way he put the things very nicely, elaborately, explained the flow. Very nice, wonderful. Good job done, Arshad. My great appreciation to you. Nikhil, we have been watching him webinar after webinar, his contribution, etc. Excellent. Especially sharing his personal experiences, practical aspect of this. Very much. Thanks a lot for Nikhil. Same with Anuj, Ashok also. I think your variety of the experiences, especially the place from you are coming from, having regard to the practicality, you shared your knowledge. Very excellent. Sudhakar, as usual, being a professional of both the sides, you can appreciate each company secretary as well as wherever you have supplemented the company secretary's role, etc., and other things and all. Thanks a lot. I think with this, we will conclude the session. Thanks a lot to everybody. We look forward for more session the forthcoming week. Thanks a lot. Thank you so much.
Thank you,
Everyone,
everyone.
God
Thank you.
bless
Thank
you.
you.
Thank you.
Have a good weekend.
Good night.
Thank you, brother.
Thank you, sir. Thank you.